Hey guys, I'm so glad you're here. This week we're jumping into Stephen Thomas's housing report, seeing what happened in 2016, what's coming in 2017. This should be a great video. I'm so glad you're back. The year's starting. Hey, before I jump into Stephen's report, I want to introduce myself. My name is Mike Munzing with Munzing Mortgage Group. I've been down here in South Orange County for nearly 30 years doing loans. Out there for you, the sellers, you, the buyers, you, the realtors. Whatever you need, you give me a call anytime. Hey, before we jump into the report, I want to encourage you to go over to my website at www.mikemunzing.com and pull down my online application. It's actually a PDF, it's fillable. You can download that and email it to your buyers. You can send them the link to it. Whatever you need to do, I'm here to get them approved so you can get another deal into escrow. Let's get these buyers into new homes. It's going to be exciting 2017, and we're going to put that together. Okay, now for Stephen's report, hit a couple of days ago. You can go find that over at www.reportsonhousing.com. It's a subscription site, so you got to sign up for that. But what he's done in this report covers 2016 and what's coming in 2017. It's kind of a 2016 overview to start with. He covers the inventory, demand, expected time on market, luxury properties, and distressed properties and how that was affected in the past year. What he kind of covers here, and I want to bring up this chart here, he's covering the inventory to start with. Now, 2016's inventory started at about 4,400 homes in the beginning of the year and ended slightly less at 4,200 homes. Now, the total homes that were put on the market through the whole year was about 44,000 homes. That's identical to 2015, so we had the same numbers. But in 2016, we sold 650 more homes, closed sales, not just on the market. So same number for the total coming on the market, closed sales for 16, about 650 more. Now, that number is 31% fewer than the average from before the recession. What was that, 2008, 2009? So it was about 31% lower than that. The major housing trend since 2008 has been less sellers. Less sellers coming on the market. We're feeling that. Our buyers are certainly feeling that. And the pricing of the homes is certainly feeling that as well. Back in 2005, the numbers were 64,000 homes were brought on the market. So in the past, we had a lot of homes on the market. Heck, I remember having 12, 13, 14,000 homes on the market at a given time back in the 2000s. But we need more homes on the market. That's kind of the overview here for the inventory aspect. Now on to the next page. Stephen covers demand. Now, demand was strong through this past year. With the record low rates, demand sizzled for most of the year, as he puts here. And now that the rates started jumping right after the elections, things certainly slowed down. We felt that, I saw that, you saw that. But now for today, as far as demand, and Stephen looks at it as properties that are currently in escrow, we are at 1,697 pending escrows, homes that are in escrow, and that is 14% below what we saw 2 weeks ago. So we're kind of seeing some weird kickoff to the year here. Now, Stephen touches briefly on the luxury homes. He looks at luxury homes above $1.25 million. And last year was the all-time record high sales for those homes. For closed sales, that was at 3,229 homes, all-time record high. And the previous high was in 2005 at 2,857 homes. Okay, on to the next page. The top here, we covered distressed properties. Not going to go much into that because he says that's merely an asterisk in the overall sales of the homes. Such a small part of the market for foreclosures and short sales. But then expected time on market, based on the low inventory and the hot demand, he says, it was absolutely a seller's market through the whole year. We kept hoping the buyer side of the market was going to come back. Now on to the next page, he has the 2017 forecast, what he foresees. I'll give a little snapshot in each area. Interest rates. Now, Stephen is predicting that we can expect slightly higher rates. He's thinking by the end of the year, we should be at 4.75 to 5%. Certainly the previous administration, the previous government has been buying those rates down. I'm not sure if the next administration, the Trump administration, is going to be doing that. So it may push those rates a little bit higher. Active inventory. He expects a high of the active inventory to be in August at about, hopeful. He said 8,500 to 9,000 homes. It would be great to see that inventory coming up. That's going to put some pressure on leveling that inflation side of the market, the escalation of the prices. So we'll see what happens with that. Now, as far as demand, that goes hand in hand with that, but Stephen does expect a fairly strong demand. As you have more properties on the market, you might create some more excitement of folks wanting to get into that market. And once again, we've got a whole new look for this country next year. I'm seeing some real excitement out there, so I'm hoping that that's going to bring more buyers up. I've got great programs for FHA, VA, conventional, jumbo, everything. We're seeing new programs coming down the pipe now, so it should be exciting tying all that together. Even though the rate's a little bit higher, the demand should continue to be strong. Now, as far as closed sales, Stephen mentions that closed sales should be slightly fewer than we saw this year. The luxury market, he also expects, well, we had a record number this year, so you got to go down from that a little bit. He expects slightly below that in the 3,000 property range. And finally, distress inventory, kind of a non-issue once again. That's going to be continuing to be a non-issue unless something drastic changes. Don't forget the back of the report. It's got great charts, great graphs, a lot of great information for your buyers, for your sellers. This report really helps you put all that together. Hey, it's the new year. It's going to be fantastic, as I keep saying, because there's just an energy out there, an excitement out there. I know I'm energized, and let's work together. You can reach me anytime at 949-689-5626. Once again, nearly 30 years in the business. I know how to put these deals together. Putting a new one together right now with co-borrowers and all kinds of stuff. Mom and dad coming in, a beautiful property, and we're just putting that deal together. The lenders want to make these deals now. They want to put these things together. So call me anytime. Once again, I mentioned my website. Pull down that application, and I am here for you. Well, God bless you. God bless your families. God bless this beautiful country. Let's get to work. It's 2017. I'm here for you. I'm here for your buyers. Have a great weekend. Bye-bye. Money, 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 money.